Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too, but that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2. So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, on to the show.
All right. Good morning, everybody. Welcome back to another live stream. Hope you're doing well. And happy Friday to you guys. It is Friday. We're back for another one. Good to have you guys here. We got 161 people viewing. We're live on Twitter, on YouTube. No Facebook today for some reason. I don't know if our Facebook connection got broken or something, but we are just live on the two. I know we don't really get very many people watching on Facebook, but, shout out to that one person on Facebook who watches us every once in a while. Hope you guys are doing well. We got Giancarlo in the chat. We got FaZe Khan. Your name is almost like FaZe Clan. That's awesome. What's up, Mark? Kalechi, Rami, Tarek, Andreas, Jamie, Yadav. If I said anyone's name wrong, I apologize. I'll probably do it again. Hope you guys are doing well. Again, it is a Friday here on the A1 Trading Show, and it's been a busy week. We had NVIDIA earnings that came out better than expected. The market popped, and then what the heck happened yesterday? Did you guys see that in a sea of red, NVIDIA, what's the rising from the ashes? What's the animal or the bird? Phoenix. The Phoenix rising from the ashes. That was NVIDIA yesterday. Because look at this. In a sea of red, NVIDIA was up. That sucker was up 10% at one point yesterday. The S&P and the NASDAQ were down. Everything was down. And NVIDIA said, cheerio, we're going higher. Okay? So we're going higher. Got the John Cena sound.
You what?
Soundboard is hot today. Okay, so let's have a look at what we are kind of dealing with today. You got the S&P 500 up, 0.28%. Got the NASDAQ up 0.37. These are modest bounces after yesterday. You were down a good bit here. You had, the NASDAQ down just about 2% from peak to trough. That's not a nothing sell-off. That being said, though, this market to me, wants to keep melting up. Now, that could be famous last words. Maybe this market's due for a bigger pullback. I did mention yesterday that I think the market's due for a pullback, but I also cautioned that pullbacks might be brief. To be honest, I wouldn't mind being able to build some positions out. There are some stocks that I want to buy and put in the portfolio. There are things that I want to do with a more constructive stock market dip. Okay. But my reaction here to price, or my first estimated guess, my educated guess, probably buyers are there. Now, if it doesn't happen, if it breaks, I'd actually be happy with that, because then I could build out some positions that I've been wanting to, if I can get a bigger pullback in the market. But there's a good chance, I would say, this market looks very strong, that could have been the dip. As crazy as that might sound, this market has done crazier things in recent times. For a long time, the play was a 2% pullback was all you'd get. You'd be lucky to get a 2% pullback, when you're looking at the S&P. 2% was pretty much mostly the moves. Now you had this April sell-off, and you saw 6.6%, but this market, in my opinion, just wants to go higher. Yields are under control. The economy has sufficiently shown signs of a little bit of slowdown. Now, you might point to yesterday's PMI numbers and say, well, hold on just a second. PMIs were strong, but you also had really strong earnings. Most of the data, the jobs data, is tame to a degree, relatively speaking, to what we've been seeing in recent months. Inflation at least had, one win for the bulls recently. Inflation came in lower than expected. We could pull up that chart. Also, let's see if this is going to work. This is always the wild card on the EDGEFINDER. This table is intense. Sometimes it works, and sometimes it just says, it's Friday, I'm out of here. See, there it is. I don't know what it is about this. This one chart is just an intense tool. Sometimes I think it's in an update cycle. That's why it's like pulling all the data again, and that's why periodically it will be stuck in loading mode, basically. But to my other points, again, NFP, jobs data, missed expectations. The last time around, we do get our latest round of jobs data coming in just a few days now. We're getting close. 2 weeks, I believe. We'll get the latest economic read from the jobs department. That'll be very key to see, again, where this inflation story is going to go. That being said, again, overall, the market is seemingly wanting to push higher for now. And again, I think that might have been the pullback. We'll see. If it breaks it, great. I'd be happy to build positions. Speaking of positions, I am just about break even on my gold position that I took yesterday. I took update on all the gold stuff. I went long here, I went long here, and I went long here. And I ended up closing out of my positions, all three of them for profit, right around this point. The problem is I then took another entry somewhere around here. And this is not even a problem. This is just part of the game. I think I stopped out somewhere around here. Market kept going lower. I stopped out pretty quick, but then I entered again when we started coming into this area where I previously had a really good entry. So I am long gold again with the stop loss pretty much below today's low. If the market rolls over, I'm speaking about the gold market. If gold rolls over today, then all good. We'll chalk it up. We'll say that's we'll take the loss if needed. But I like the trade still. I still think gold has room to the upside. I've pointed out that on the top setups window, gold is still up there. You got bullish readings. Same thing for euro, pound, gold. I'd like to look at those as well and see if there's anything setting up. As far as I checked yesterday, I couldn't quite justify an entry yet on the euro dollar. See, there's, again, I might miss it, but I was pointing out that I'd like this pullback to here. That would be kind of where I'm interested. But instead, what we've got is today, euro reversing higher, making a push to the upside. So I'd be interested in this one if it does, roll over, pull back further. And if it doesn't, then I missed the trade, and that's okay. So I like euro, I like pound to the upside, I like gold. Pound USD, again, came back and just narrowly tapped into this zone here, pushed off of that level. To me, the pound looks like it is wanting to go higher. Looks like it might head up to that 1.28 mark that we've talked about a couple times on stream. So watching GU here to the upside for now. Again, no entries for me on these two, but I have my gold entry, so they're probably going to move together, right? Euro, dollar, and gold have pretty high correlation. Dollar yen also just modestly higher here on the day. We've been talking a lot about Japan on the live streams. Do we have any reads on JPY? Not for USD, but we do for pound yen and euro yen. Not pairs that we talk about regularly, but they're on the EDGEFINDER. So let's look at GJ. I know this is for the Forex traders out there. This is like the Forex day traders' favorite poison right here is GJ. What do you do any Forex traders here like trading GJ? I know this is like when I watch, if I ever tune into like a day trading Forex stream, they're always looking at pound yen and gold. That is the two things that they're constantly watching. That's like the crowd favorite. Anyways, GJ is just shy of 200. I mean, this one's making a run for it right now. Price action looks pretty clean, I will say. Moving nice here to the upside here today. Again, if you get something like this, that might actually be kind of an aggressive entry, but an entry that I still like. Again, GJ getting a nice reading on the edge finder. Haven't seen, GJ make its way into the picture here in a while, but economic data is kind of mixed when compared to Japan, but you are getting, some strong GDP prints in favor of UK compared to Japan. Services PMI giving us a couple points there. The trend is to the upside clearly. Seasonally, decent time to be long. Retail positioning is short against the pound yen, so that's a bullish signal for us on the edge finders calculations. By the way, speaking of Edge Finder, today we're giving away a copy of the Edge Finder, and we'll do that. Let's do that at the end of the stream. But if you have not entered already, this is your last chance to enter. So if you have not already, let's do this. We're going to give away an Edge Finder copy, and James, could you ask Emily and Hallie to help us with that? We just need to select a winner at the end of the stream. So if you could help with me, just have somebody help us to select the winner. Again, we are going to be giving away an Edge Finder copy. It is free to join. Again, we've just dropped the link here in the chat. Enter the giveaway if you have not already. It takes 2 seconds to enter. And more importantly, you might win a copy, which if you win a copy, you're getting away with, 2 years of software development and years beyond that of studying this stuff and building out this tool. So if you do not have a copy already, we're giving it away. We've been talking about this all week. So again, last call to enter the giveaway for a free chance to win an Edge Finder copy. Okay, let's push on. Let's talk about some other things that are on the software here today. We got euro dollar, pound dollar. I do like both of those. Waiting for pullbacks if we get them. If not, I really wouldn't mind it, because again, that would probably mean gold is pushing higher, and I'm already long gold. I might have been a little bit early with my entry, but I don't really mind if I need to re-enter a few times. That's something that I've come to be very okay with my trading. Is if I get stopped out, no one likes getting stopped out, don't get me wrong, but it's so necessary sometimes to just get stopped out a few times before I finally find my entry that's right. You might say, well, you should just up your technicals game, but I just think that no matter how good you are with technicals, the markets are just volatile. There's noise built into them, and there's just way too many variables that go into why price goes up and down to try and think that your entries are just going to be spot on all the time. It's just not realistic. Think about it. There are millions and millions of variables as to why gold is going up or down on a given day. Millions, right? There's so many different traders with so many different styles. The chart is moving. And so to think oh, well, if I use trend lines, that's what everybody is looking at, and that's going to be self-fulfilling, and that's why it's going to move higher. Nope. What about moving averages? Nope, because other people don't use moving averages, right? There's too many variables. There's fundamental traders. There are people who are simply hedging their mining operations that are active on the markets. To try and think that exactly when the market is going to go up or down, in my opinion, it's kind of foolish. Now, I'm not saying that you can't, use your tools to your advantage, find good levels that do make sense, but I'm just saying don't overestimate the importance of a technical entry. A technical entry should be, to be honest, 10% of your entire trading process. I really think that people overestimate tremendously the importance of entries, underestimate exits. They underestimate fundamental analysis substantially. They underestimate risk management. They underestimate the importance of having trading capital that is sufficient to actually make decent money without risking your whole account every day. They underestimate how important it is to understand thoroughly what an estimated drawdown and expected drawdown should be for you. If you don't have those things figured out, you could have the best entries in the world. Don't matter, because nothing is perfect. Nothing is surefire, always going to get you into a trade with no drawdown. It's just, if it were that easy, literally everybody would be doing this, right? The reason people don't is because They overestimate entries and they underestimate all the other things that I just listed that are far more important. So when I say I'm long in a trade and I'm like, oh, well, if I get stopped out, I get stopped out. I have, had several of my great trades have been preceded by a string of losses. Like I've tried a couple of times, just couldn't find my bearings. And then finally the right entry comes along and off to the races. So yeah, definitely. I purchased the EDGEFINDER 2 weeks back. I'm now in a 3-way relationship with the missus and the EDGEFINDER. Welcome to my life. Just kidding. The wife is number 1, but EDGEFINDER is like right there at number 2. I'm telling you what. S&P, the market just opened up, by the way, stock market, that is. New York Stock Exchange is live. In the opening minutes, we do see stocks just taking just a slight bit of heat here. Nothing too substantial. I think we do get some data here this morning, right? It's Consumer Confidence Day. I love the Consumer Confidence Indicator. I think it's very cool. Allows us to look at it again, the consumer confidence, the consumer sentiment. I think it is very valuable to ask a bunch of people what their plans are to do with their spending, right? Like, are you going to go travel this summer? Are you finding yourself spending more on, shopping goods like for fun, or are you only, are you tapped out? Like if you could get the sentiment, and that is what this indicator is for, getting the sentiment of the consumer. It's going to come out better than expected. We'll see. Do we have a fortune teller in the audience? But your name is I don't know. So that's tricky. So maybe you're saying, I don't know, it's going to come out better than expected. So maybe you're saying, I don't know. I spend more time looking at the EDGEFINDER than my wife. That's a quote right there. I know somebody's going to clip that, and then you guys are going to hear it on the soundboard. Okay? That's what happens around here these days, is you say one thing and you get clipped and you get put on the soundboard. Let's not clip that. Hey, Nick, I have a question for you. And what do you think about 10K prop firm? And can I use it to make millions? Okay, come on. Read your comment back. Read your comment back and you tell me, do you think you're going to make millions off of a 10K prop firm account? Come on. You may make millions over many years. That's kind of the goal around here, is like make money over the decades, not over the next 20 minutes. Gold trying to squeeze higher here. I'm liking it. I'm liking the reversal here. I might stay in my trade. That'd be awesome. Yields also creeping a little higher here today. TLT's down, still stuck in this position. Hasn't really made a move anywhere in a while. Silver's up 1.26%. Oil, I've been wanting to short oil. So if oil does, give me a pullback, I might watch that one for an entry. What's old Bitcoin doing? Bitcoin's trading around 67,000. If you're a bull on Bitcoin, you have a little bit of a kind of like a, you broke out here and now we're seeing a pullback. This could be interesting. I don't have any reason to buy Bitcoin at this time, fundamentally. Ethereum. You could make the argument like the rumor about Ethereum ETFs is all over the place. Like that's kind of been one of the hype figures recently for crypto. The dollar index is tapping up against a resistance point here at 105. I'm very curious to see how we react to this level. I generally think that this level looks like resistance to me. I think we could go lower. That's what I'm positioned for. I'm long TLT. I'm long gold. I'm long stocks. So I'm sort of positioned for some dollar weakness. That's what I think will happen. But just because I think it does not guarantee it. Please understand the difference. New traders will sometimes hear a trader with experience or with a platform talk about like, oh, I have this opinion. And when it's wrong, they're like, but he said it was going to do this. And Nobody knows, not me, not your brother, not your mother. Nobody knows with certainty what the market is going to do next. All we are doing, the best traders and investors in the world, are making educated guesses and risking small, right? That's what the best traders in the world are doing. Educated guesses, risk small, do it over and over and over. And if you have an edge, you'll come out making money. So we are coming in close here to revised UOM consumer sentiment. I also just wanted to mention, I said it earlier, but in case we've had some new people join the stream here, if you're watching on Twitter or you're watching on YouTube, we are going to be giving away an EDGEFINDER copy at the end of today's stream. If you have not joined the EDGEFINDER giveaway for a chance to win, we're going to drop the link one more time. I just don't want anybody to miss their chance to win a copy of the tool. It is free to join, takes 2 seconds into the giveaway here. And if you're watching on Twitter, there should be a comment below the live stream that you're watching. So with that said, we've got Kenzo in the back room, guys. We're going to be doing our Fundamental Fridays, and Kenzo will be sticking around with us until consumer sentiment. That's awesome. Okay, so real quick, guys, we're going to take just a short break, set up the stream for Kenzo to join us, and we'll be back just after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back with Kenzo. Hey, Kenzo, how's it going, man?
I'm doing great. Thanks, and you, man?
I'm doing good. It's good to have you back on the show here. It is Friday, and we have some news coming out shortly. We've had a pretty busy week in the markets as a whole. You know, we had the meeting minutes this week. We had NVIDIA this week. What are your thoughts? What are you watching here today, Kenzo?
Yeah, I was actually on Nasdaq US 30s and also gold, but this week events, they were not actually good for us. Only NVIDIA, it was positive, but when we check other stuff like FOMC comments were not really that good. And service PMIs and manufacturing PMIs, they were also positive, which means they make the dollar to be quite aggressive or positive. And that is a problem for the Federal Reserve to actually cut the rates. So maybe now, in a few minutes, maybe the news won't be that positive. But if they are going to be positive, it's going to be a different story. But in general, I think inflation is still actually trying to go higher. And that will overshadow everything that is happening now positively, like NVIDIA. So we don't really see those bullish moves, even though actually if maybe the economic, these events were positive, I think NASDAQ, S&P 500, they were going to fly.
Interesting. Yeah, I mean, so we had a big break here recently. And to your point yesterday, NVIDIA, or on Wednesday, NVIDIA really shot up after markets. And actually yesterday, in a sea of red, NVIDIA was like the only one that was green. I mean, not the only one, but most stocks, most individual companies had a tough day yesterday. And you know, following the news from them, but the indices themselves, you know, pulled back to this level. I'm very curious as we do pull back to this 5250 area, whether or not you think this will hold. I mentioned that, you know, this market has been so strong, it's been so resilient, and every pullback seems to just be bought. I'm just wondering what your thoughts are. Do you think you have room to bounce higher, or if you're pointing out that maybe some hawkishness is making its way back into the picture, do you think we go back for a further pullback?
Yeah, I think the thing is, I feel like even if we had a pullback, it's not really that crazy if we compare that with the bullish move that we had for maybe 3 weeks now. You can see from this level to that, we never had any proper reversal. So I think that there was a need for the market to reverse a little bit before we see the market going up. So it's just that it happens those days where we have the news. But beside the news, I think a reversal was actually supposed to be there, because this was quite steep and it was starting to be quite difficult for us to keep buying. So I think a reversal, even now, I feel like a nice reversal, it's actually needed, so that once the market tries to go up again, it is going to have that momentum. But at the moment, it's like it's exhausted, or we can just say it's overbought. Even though things are going well on the stock markets, but we are actually very high, especially when we broke those higher areas. I think the market needed a nice push. Nvidia did have that, but alone, or maybe let's say with this inflation still creeping in, that is going to be a difficult journey. But at the moment, we're still very high. If we can check for 2 weeks, or for actually a month or two, we are still very, very, very high. It's just that when we follow the news, like on CNBC, they just hype everything like the market is crashing. If you check, you can check there. I don't really see any bad move, you see.
Yeah. Yeah, no, you're definitely right. I think that when you look at the indices, they've had just an incredible run in in the last year or so, but especially since the end of
Yes.
last year into this year, they've just been pretty much straight shot to the upside. You had 1 month there that was down about 6%. I think the average yearly drawdown at some point for the indices, for the S&P 500 specifically, is like 14%. So is it possible that now that we've had a lot of news behind us, and Nvidia was quite saved the market? It's kind of weird. It did, and it didn't at the same time. Like Nvidia earnings were so good, and yet the market, it just
Mhm.
shows you, Enzo, where the market is. To your point, is it expensive? Is it, is there so much hype built into this story? I think yes. I mean, Nvidia earnings last time around rallied the market by 5% in the following 30 days, give or take. So if you're
Yes.
looking at the reaction now, the day after, the market itself dropped by 1%. So it tells you that, even though Nvidia had smashing earnings, even though the whole earnings season itself was a remarkable earnings season, my opinion is I'm bullish on
Mhm.
this market, but I don't like to chase price, because again, the estimations, the expectations for this market are so high right now that it makes it very hard
Exactly.
to push higher, right? The outlook is so positive for stocks right now that you have to ask yourself what's really going to substantially push this thing higher. And it's always that question, Kenzo, of what's the risk, what's the reward? If the risk is,
Mhm.
the economy substantially starts to slow, or inflation, as you pointed out, like maybe it does bottom out again and goes higher, suddenly the concept of possible rate hikes, possible, holding higher interest rates for longer, maybe no cuts this year, would be a bear
Mhm.
case. That would be, okay, where are we at on this this stock market's price? Is this too high? And I think that if you get, either the economy substantially slowing, or inflation ticking higher, you could be looking at, again, the average pullback is 14%. In April, we only saw
Mhm.
6 or 7.
Exactly. Yeah, I think I can't say we actually overbought, because if you uh, if you checked the earnings from Microsoft and the other companies, I think it's few weeks ago, they were all
Mhm.
positive, and the market did not really react positively to that. The market was not really jumping up around that time.
Sure.
Even now, yes, Nvidia was quite positive. We know this AI thing is still going very strong. But just because the market is not really performing very well, I mean, the economy, they did not really actually jump higher, which means we still have that fire still burning, waiting for explosion to go up, but it's not really happening now because of the economy still thinking about inflation and stuff like that. But once we clear out of that, it's where we're going to see some serious trends, which we've been waiting for, but they are not actually happening. Because at the moment, if maybe the inflation or other economic news, if everything was good, we were going to be breaking other records at the moment. But now we're still waiting, maybe next week or maybe within a few minutes. If maybe in few minutes, sentiment, I think it's consumer sentiment, right? If maybe it's going to be negative, we might see Nasdaq or gold going even aggressive, but it's because of what was actually happening a few days ago, because the market did not really react to what is happening at the moment. If you still remember previously, Nvidia actually pushed the market aggressively, but at the moment that did not really happen.
Yep, exactly.
But the estimates, and they did beat the estimates, and the money is coming in. So that money has to show us in the market. So which means the pricing of the market at the moment is not really relating with the results. So it means maybe next week or whatever, then the market will still show us those bullish moves.
Yeah, and I think that from a price action perspective too, Kenzo, what I'm seeing here, at least on the chart, is that you had this level here, this 5250 level, which was our last stall out point. Market proceeded to really sell off from there, and when we kind of started to bounce and moved higher, what I noticed is that there were just so many green candles here in a row. And we made our way up to that level of resistance. And from a price action story, what I found interesting was that the next candle was no hesitation. Well, I mean, there was some hesitation on this candle, but my point is on the very next candle, after we reached that level, the market just pumped through the highs. That was very, very bullish. So the reason I'm pointing that out is that if you are bullish on the market, you very much want to see a similar reaction here. And if you don't, for the bears, if you see a break of this level, my opinion would be, if you see a break of that level, let's look left. All of this could be considered kind of like a big gap fill. You could see price just kind of say, well, we didn't hold all of that confidence that we made over here. So why don't we need to, where do we need to go to find the next kind of confident level where buyers were able to break out decisively? Well, the one I see is this 51.25. So that would be a pullback to calculate this out. That would be about a 4.5% pullback back down to that 5100, 51.25 level. So I just thought that was worth mentioning is, you had this sprint to the highs here, that really big push to the upside, and then a big break through the highs. So if we fail out at this 5250 level, it's possible that we go back to fill that that zone and do a little bit of zone to zone trading. That's my opinion. Is that what you're thinking too, Kenzo?
No, that is actually perfect. You on that one, it's perfect because currently we are mostly talking about the economic news and whatever the earnings, but we also sometimes forget about technical. On the technical side, it makes sense to see a nice reversal. You see. But since we already broke out of that level, it's good to, if the market bounces back there, yes, we are going to continue buying, but a reversal, I think it was necessary because we can see those bullish moves going aggressively high. So which means if we see a reversal, it's good because it makes sense to fill that that zone, because we've been going up for more than maybe for a week straight or 2 weeks straight without any proper reversal. And most likely, the market can't actually sustain those type of structures. One way or another, the market will reverse. Even though we did not really have any news, the market was going to reverse, you see. So the thing is, we have so much stuff going on the news, on the fundamental side. And sometimes we forget that technical also can actually do its thing.
Yes, definitely. Very important to consider both for sure, Kenzo. Kenzo, we've got news here in just about 2 minutes. I'm just going to switch over my view so we can watch the reaction. We have the consumer confidence reading here. What are your thoughts on that? Do you ever pay attention to consumer confidence at all? I mean, it tells us a little bit of insight into, again, the consumer's sentiment overall.
Yeah, I actually, this time, even those news where they were not actually important before, but just because now economies are very volatile and things are not going well, so every small economic news start to matter. You see, everything start to matter. So we have to check everything if maybe we have some changes in the market. So yeah, I do check that. Like yesterday, the market started to sell because of sentiment and PMIs. But mostly, if you go maybe a year ago, those were not really aggressive news or stuff like that. You see, but just because things are not really looking good, obviously we start to look at every economic news so that we can have a clear idea if maybe they are going to cut the rates or not. That's why everything just starts to matter. So I don't really see my calendar. Let me check my calendar. I don't know if maybe they are positive or negative. Oh, we left with few seconds.
Yep, we've got just about 30 seconds here to go until we get the consumer sentiment number. I've got it pulled up on the screen here. About 20 seconds to go. Guys, just take a quick second. If you have not already, hit the thumbs up button on the stream. And we've got ourselves some breaking news coming in just a moment. All right, let's see what we got. Consumer confidence. Let's see if it moves anything here this morning. All right, consumer confidence. Let's see if it does anything again. Just a slight blip higher in the S&P, the NAS, the Dow, dollar index just slightly lower there. Gold slightly higher. Let's see if we get anything here. Okay, it was slightly better than expected in terms of what the consumer is feeling. This is an index, so we had 67.8 being the forecast. We got 69.1. That is that's a beat here. But nothing significantly big. But the bigger picture, I guess, Kenzo, is just the health of the consumer is really important too, because if people are significantly pulling back on their spending, that of course has a huge impact on the valuations of stocks, right?
Yes, and also recession. If maybe there are few people who are not spending, that is also not good for the economy because they have to collect their taxes. So that's why sometimes they might be positive, and at the same time, the stock market can still go up because we don't really want the economy to crash. So that is actually a good thing for now. So I think this will actually push Nasdaq US30s to go even higher, maybe even gold, because at least we need a balanced economy. So if consumer sentiment is performing very well, it shows that things are starting to go back, not actually back to normal, because I think now and before we had some like jobless claims were higher. At least yesterday they were a little bit lower. So companies are laying off like employees left and right. That is not really good for the economy also. So yeah, I feel like it's not really that bad. I think maybe we might see some recoveries, even if it's not going to be that aggressive.
Well, very good. Yep. Well, Kenzo, I want to thank you for coming on here today. You come on every Fridays, and for everybody who is listening, if you have not already followed Kenzo on his own YouTube channel, he puts out great content. If you are looking to learn more about both the technicals and the fundamentals side of trading, check out Extra Hot Forex on YouTube. Here is his link. We just dropped that in the chat for you. Guys, do us a big favor. Make sure to go show some love to Kenzo, subscribe to him. And Kenzo, thanks very much for coming on the show today.
Thank you very much, man. And thanks to your viewers also.
Absolutely. Well, thank you very much. Guys, I also wanted to point out something that we are doing here. If you've missed this opportunity so far, this is the last call. We're doing an EDGEFINDER giveaway here today on stream. We've been talking about it all week. If you have not entered for a chance to win, click the link being dropped in the chat. Again, one random person is going to be selected to win a copy of our software tool, the EDGEFINDER, which we show in all of the live streams videos. It's how we take on the markets and pull up all this economic data. So again, if you have not already entered the giveaway, click this link, and we are going to be announcing that winner in just a minute. Right after this quick break, we will be announcing a winner. So throw your name in there if you have not already. You got like 2 minutes or less to do so. And with that said, we'll roll a quick break, and we're joined by Chris Pulver just after this. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30, for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, and we are back. I'm hidden behind this thing, Chris, but I'm coming. There I am. Sorry about that. We've got our new stream templates that we're working out the kinks. Good to see you, Chris. How you doing?
You too. Happy Friday, man. Well, all the excitement was wrapped up into Thursday's trading. We had NVIDIA earnings Wednesday that really took the cake as far as producing some volatility. Things are pretty silent today. I did do a little butterfly spread this morning on the SPX, trading a little gamma level at 52.75. That looks something like this. So that could be a wasted $120 this morning. We'll find out. But if we settle in around this level, if we just have a gap fill today, or we settle back in around this 52.75 later today, I could take $1.25, maybe turn it into, $2 or something like that. If I let it go cash settle by the end of the day, maybe it turns into a big old win, like $800. We'll find out. So that's the only trade I took. I'm watching that level closely. Price action was pretty interesting yesterday. I wasn't surprised that we had a sell-off. Are you surprised?
No, I feel like it's one of those things when the market has nothing left to look forward to. After big earnings like that, I was shocked just to see. I'm not really shocked, but I made the reference of like a phoenix rising through the ashes. That was NVIDIA yesterday, because everything else fell, and NVIDIA just up 10% like it's nothing.
Did you actually look at the heat map? I think everything was red, and the joke, somebody just posted, it was a joke. It's like, this is why diversification is terrible, because it's just NVIDIA was green and everything else is red.
The one that we saw and put on the A1 Trading Instagram story was so it's like the whole heat map, and NVIDIA is the only one green. It says when you're in a group project and you're the only one doing all the work. And I was like, that is so true.
Very true.
So yeah. Also, Chris, before we jump into a bunch of markets, I do just have to follow up on what I just said here. We're giving away an EDGEFINDER copy to someone in the chat. We have selected a winner. So I want to thank everybody for entering for a chance to win a copy of the EDGEFINDER. Our winner is, and I'm not sure how to say this person's name, so I'm gonna try, is Silas Akoja, I think. Silas. I'm not sure how to say your name. I apologize. You are our winner. We have your email. Please email us at A1 Trading, support at a1trading.com. And we're going to go ahead and give you a free copy of the EDGEFINDER. So send that email. Congratulations to Silas. Again, don't know how to say your name. Apologize, but you're our winner today. So shout out to everybody for involving yourself in the giveaway. And if you didn't win today, maybe you'll win next time. Thank you guys for everybody who entered for a chance to win. Okay, so let's talk about something, Chris. I want to ask your thoughts about gold and silver. I went long again. I might be too early, It had a
Okay.
big sell-off here.
Yeah.
Last couple of days really gave back some gains. And I decided to jump back into my trade. I still like the picture despite PMI data coming out a little hot yesterday. I mean, to me, it still seems like the overall trend is that the economy is showing some pretty uniform signs of slowing down a little bit. And yes, there was some hawkish meeting minutes, but I feel like that's kind of hearsay compared to the numbers. The numbers seem to be coming in a little bit light. So I like the upside for gold here. I think that you've ruled out a lot of the the bulls who are kind of chasing into this move. I think we're out of the woods there, and so I like the entry. If I get stopped out, I'll probably try again around like 22.90 is what I'm thinking. So I don't know, I was just trying to get your thoughts on silver and or gold, either one. What are your thoughts on it today?
Yeah, let's take a look. So I like both, and I like both. Give yourself, a solid runway of 6 months, 12 months. I know you're definitely more long-term oriented on both of them. I'm just looking at gold right now. We did make a slightly higher high. We're getting not a lot of momentum follow through, and from overbought conditions, I guess my one concern would be that. And that doesn't change really anything outside of we're going to see some chop up here. And I think on Monday, during the session, we talked about this look to gold and silver. Gold maybe having a little pullback like this, where it pulls back and kind of resets around 2270, 2275. I think that's another opportunity. I'm also considering buying another tranche of shares of GLD at 2275 or 2270. If it comes down any lower, I'd happily pick up some more around 2250 or so. But I think this is just going to be a pause. Bigger picture, both of them look better. As we mentioned, technically, I still like silver better because it's a measured move to me. We're still in a wave 3. I think gold has made 1, 2, 3, 4, 5. I think we've made a 5th wave move here. 1, 2. This could be 3, 4, 5, and we're just kind of figuring out how to get through this chop right now with a bit of a correction phase. But longer term, I still think central banks are buying gold. It's an alternative play against the dollar. It's an inflation hedge. It's a slowdown hedge. It's a store of value that I don't know has a cap necessarily. So
I don't think so either. And Chris, also, gold or silver. You mentioned silver.
Yep.
I don't know if everybody in the audience realizes how much silver has performed this year. I've got it pulled up on my screen for a second. 34% up approximately since the start of the year. I mean, that is a massive run for silver. And you're talking about something that has been dormant for months and months and months, finally making the move. In my opinion, if it's going to make a move, it's going to make the move sooner rather than later. Like it's either going to, like, I think that the chance of this thing either going way up or way down is more likely than us just like, okay, it just stays here. I don't think that happens. I think we either, like kind of find support in this recent rally and go higher. That's what I most likely think. Or we just completely fall apart and the Fed starts hiking rates again. That's the other scenario.
Right. But is the Fed going to start hiking rates?
I don't think so. I don't think so.
No.
Not ahead of an election. That would be bold.
Look, I was talking about this morning in my previous session. Right now, the Fed has shifted. We talked about this this week several times, but the shift has happened once again in the Fed expectations. Right now, the market's looking at possibly the first cut in November. September probability is down.
Yep.
Where if I look at the, let's just go back to the histogram. September is actually showing a lower probability of a rate cut now. 49% that there's no cut and 45% that there is a cut. But November creeping up here with 46% probability that they make the first cut. I'm like, that is a gutsy play to have November 7th FOMC with a rate cut on the table with an election on the 5th.
Yep.
That's a really crazy. And I know the Fed is not political, but that is totally a political play if that happens.
Is crazy there. Yeah.
And I don't think it's like that would be disruptive if they do that. So I think there's either no cut or in order to, I think the concern would be if there's a no cut scenario, then the market's going to price in a no cut scenario earlier as opposed to right during the election, because historically Q4 is always typically bullish. Q4 to Q1, it's a pretty good runway for the markets. But again, we don't know. We don't know what's going to happen. It could be a really crazy election. There could be a ton of volatility. I still think the market's going to find a way to shrug it all off and try to melt up higher, whatever happens. The market could probably justify, if you look into the manure of what's happening in the markets fundamentally, somebody can make the excuse and say, well, it's because Trump wins and this is why the market's going up. It's because it's the incumbent and, Biden wins another term and the market's going up. But one thing I heard yesterday was pretty important. This is a good saying, that politics don't matter, but policy does. So if we start seeing any policy shifting, then the market takes notice. But politics, I mean, we deal with that crap all the time, and it's just a bunch of noise and circus in the background.
Yep, makes sense. I was actually talking yesterday with I do a podcast for marketpulse.com, and I was on the podcast with the guy is from the UK that does it with me on there, and he was pointing out that UK elections have just been announced for July 4th, which is also kind of just adding to the overall story of, maybe there's some volatility coming this year, whether it be from the US, whether it be from somewhere else. I think there was also like boats parked outside of Taiwan, but the thing for politics, I'm the same way. Like, I can't like predict or measure that at all. Like, it's just so like suddenly it's on the headlines, and very hard to predict what's going to happen next when it comes to, presidential elections or geopolitical tensions or things like that. All I can really do is look at price action and look at the economic data that's in front of me. That is, the two things that I make up most of my decisions based off of. So, I just thought that was worth mentioning. You can get so caught up as a trader just chasing, news article headlines. And that's really not usually a great indicator even.
I said this yesterday in a class that I taught, throughout my career, I'll talk Forex for a second, because through my Forex trading, one of the most technically obedient markets that I've ever seen. You want to know what to do in Forex. If you could just put on blinders and just trade the charts, you're probably going to be a better Forex trader. Now, I will say that if you're a Forex trader that doesn't use stop losses, you're going to have some problems, 2008, 2009, 2011, 2016, 2020. We've had some flash crashes. I mentioned great financial crisis, the US downgrade and sovereign debt crisis in Europe. I mentioned Brexit and COVID, of course. So those four elements, and then you put in 2022 with the Japanese yen, some wild stuff happening there. So obviously, trade what you see, but have a plan. It's all about risk management. And I just think it's interesting. Like, if I never focused on the news and I just traded the charts, the Forex market, the Forex side of things would be pretty straightforward. You just trade what you see. In stocks, it's different. In stocks, you have to just remember, the market will find any reason to latch onto something to make it move higher. I mean, we're talking about right now, it's no longer the Mag 7, Nick. It's called the Fabulous Four, because now it's Meta, NVIDIA, Google, and Microsoft. That's it. That's your Fab Four. Right now, that is 19% of the entire S&P, and it's responsible for over 35% of the entire S&P gains this year. Those four stocks. Yeah,
it's crazy.
It's crazy, right? It's so concentrated. So my point is, like, the market's latching on to AI. The market's latching on to NVIDIA. NVIDIA is now top 3 in the world market cap wise, and it seems like it can't be stopped. Again, does it matter if they do a 10-for-1 split? Is everyone going to jump in and buy NVIDIA at $95 instead of $950? Maybe not. I don't know. So it's just the market will find a way and find any excuse to try to rationalize going higher, but doesn't mean we don't have certain windows where we're going to have a correction. I think that this year the market will likely not dump as aggressive as like the perma bears out there are saying. I think we're going to have a volatile year, but I think the market ultimately, after being up 10, 11, 12% for the year, is going to do what it can to cling to those gains. Now, maybe we push up to 20% and then we fade back to 10, 12%. Maybe we, go from 11% to 5% and rip back up to 15 or 20%. I don't know, but something's going to happen and we're going to trade it. Regardless of what happens, we're going to try to find a way to make money. So just stick to what you know. I'm not a political expert. I don't want to be. I'm somebody that trades the markets and find a way to navigate all this stuff. And I'm still here. I've survived all the biggest financial news events that we've had in the last 20 years. So something's okay by just keeping the risk small and trading.
Yep, that's so true. That's so true. And speaking of the leaders, the Nasdaq has had just a massive run here recently. So with NVIDIA's pop, NVIDIA helped the Nasdaq reach all-time highs, gave back those gains in the second half of the day after what was the news that I forgot what the PMIs came out yesterday, a little bit hot. Market didn't like it, sold off. Recovering those losses there today. Now back near the all-time closing high. Question is, Chris, is this market? The last guest who was on, Kenzo, he's great. He was pointing out that just the reaction. We were talking about the reaction to the Nvidia earnings last time. It was like a 5% pump, like in the S&P. This time, 1% down on the day following. Not 5% in one day. Last time,
right? It drifted higher.
Days. Yeah. But is there going to be a similar reaction here? I don't know. I feel like we would have seen a really solid hold of those gains if the just melt up was going to continue. It seems like now we have inflation concerns resurfacing again from the Fed meeting minutes. PMI data was slightly higher. Maybe the market, I still think that it goes higher this year, but maybe the market is due for another pullback. Maybe it's due for a corrective move. And, if nothing else, I'm not saying I'm shorting it, but again, back to the state of, I picked up some entries here, Chris, and that was one of the best trades that I've had this year. Was just all that time where I said, oh, I'm waiting for a pullback. And I just felt like such a dummy. When it happens quick. And I ended up selling puts. I got assigned, and then I am still in that VOO trade today. I mean, so this VOO trade ended up being a pretty dang good entry. Just waiting all that time. I mean, I sat there and waited on the S&P for months while it drifted higher.
Sure.
But when it makes its move, Chris, that's the thing. Everybody forgets that it can go down, and then when it goes down quick.
Right. Well, one thing on the candle that we had yesterday. So yesterday's big red candle, it almost has the same type of feel as this candle when we finally put in a bit more of a top and the bears were pronounced to the downside. So I could see the next trade for direction just being a simple breakout trade. Basically, you're putting in a candle with Nvidia that either the market can say, okay, we'll shrug it off and continue to grind higher, or we are going to drop for more of a correction. Now, if we drop for more of a correction, are we going to take out these lows? This could be a broadening pattern where the market might scare everybody, but guess what I'll do? If we tap these levels, I'm going to buy these lows and probably look for the same thing to try to justify revisiting these highs. I mean, we saw a 6% sell-off, 7.5% rally. If we see a 7-8% correction and then see an 8 to 10% correction, look, if you timed this, you just said that's one of your best trades of the year. If you timed this, that could match that, right?
Yeah.
So you could have two great trades by just a little bit of timing. If we see the market, kind of cooperate in a, in a broadening pattern it's a tricky one for the basic trader, because what does everybody try to do? Everyone tries to buy the breakout highs or sell the breakout lows. And instead, the broadening pattern does the exact opposite. It takes all those sellers down here and then runs them the other way, takes all the buyers up here and then runs them the other way. So if it's something like that, it's going to be tricky, but we'll be watching.
So I wanted to also show you something, Chris. I learned a lesson back in 2020 that I think a lot of people probably learned too. I just wanted to show you this chart. Frank and I first got into the financial markets like 2015, 2016, somewhere around this area. We first started studying stocks together. We were in his basement looking at stocks. And at that time, I remember we proceeded to go into 2017. That was when we really started, looking at things closer. And I just remember being so frustrated because even back then in my early days, I was like, I don't want to chase. I don't want to buy stocks when they're up. I like, right. It's a pretty rudimentary thing. Like I want to buy stocks when they're down a little bit. I'll wait for a pause. And I remember being so frustrated back in those times because I couldn't really build out a portfolio. Now I still, ended up building. I bought stocks along the way that I liked. And I mean, I did okay during this time, just, kind of playing with stocks. And then at the same, I also got into Forex around here. But my point was showing you this too. And for everybody who's listening is that I remember fast forward to, we had gotten into our first office and we were, working day in, day out, and the summertime came and COVID hit. And yes, this is a freak move. Yes, this is a one-off kind of movement that is so rare to happen, but look at where stocks came back to.
Yep.
They came all the way back from my entire trading career, pretty much, just
Reset.
about.
Yeah.
They reset like 4 to 5 years of gains.
Yeah.
So all that bull market, all that rally, again, what you have to remember in this stuff is that everybody, they have tunnel vision. They only look at this and they say, that's what stocks do. That's what the market does. And they just learn, like right now, another similar mistake is people think that the dollar yen can never go down. You have to be aware that play it while it's there, but when conditions change, again, if you had even just an ounce of timing in your trading, to your point about timing, this is where I made the biggest gains I ever made on a percentage basis was buying breakouts on the NASDAQ all year long was like the greatest trade series of my life. That plus the elections, that was a wonderful time. And then it led to just the easy bull market. I struggled in 2022. But the reason I point that out is just, we have to always remember, don't let recency bias blind you in whatever you're trading, whether it be FX, indices, things that are, like if you look at UJ, that's like a one that's just gone straight up for a while. This can change. And Chris and I talked about this before, I believe on a Friday, when this thing wants to sell off, it can be violent as well. So just be careful out there.
Yeah. And on the timing of things, I mean, it's never going to feel great when the market is dropping and tanking. And I mean, 2020 felt like, is the world coming to a halt? We essentially shut down global commerce and global business everywhere, right? So it's like nobody really knew what would happen. And the reality was, I mean, central banks stepped up and it was a giant global stimulus program that everyone put out there. And, inflation and aftermath and all the stuff that's still kind of sticking around and creating all these, mixed narratives. It's never easy, right? I mean, there's always a level of discomfort in the markets. But as far as having cash at the ready, taking advantage of opportunities, I mean, if you just look at the index, Nick had the chart. Nick's got the chart up there. The index, when it just came down and tapped the previous lows, wiped away 4, 5, 6 years of gains. The reason I was so bullish in 2020 after the COVID crash was, number one, I was bearish going into 2020. So I was actually correct on the bearish side at first. And then once I looked across the board and I saw, stocks that I was interested in, stocks that I've been in for a while, and I had 8 to 10 year discounts. I hadn't seen prices that low for like the last decade. So I just said, okay, here's $1,000 here. Here's $1,000 here. Here's a couple $1,000 here. And I just built that portfolio out because I'm like, I'll just take some stabs. I didn't know that we were going to have triple digit gains going for the next 1 to 2 years. Yeah. But from 2020 into 2021, that momentum was so strong, it carried us into what ultimately came that little reset in 2022. But because I had cash at the ready, because I wasn't overly invested, it did give me the opportunity to participate. And one thing I want to say is at any given time, all right, you have to understand this in the stock market. At any given time, the stock market could easily have a 10 to 20+% pullback at any time.
Yeah, and I make this point too. One of the guys that I like a lot on YouTube is his name is Jeremy Financial Education. He's kind of a funny dude. If you've never seen him, check him out. But he makes that point too about like especially if you're investing in growth stocks. He says 60. He's like, if you're not ready for a 60% drawdown your account, if you've got growth stocks in there heavily, then you should probably just stick to index funds and buy and hold, because you don't want the smoke when it finally happens. Like growth stocks can be nasty. If you had your favorite names were like Shopify and Carvana, and like if that was what was in your portfolio in 2022, you lost like 80% probably on your portfolio. So you got to be you got to be careful out there. Chris, I'm gonna give you the show here for a little bit. Let you take over and hang out with everybody, guys. Before I step out, make sure, if you have not already, to subscribe to Chris Pulver on his own YouTube channel. And if you're watching with us on Twitter, we are streaming both to YouTube and Twitter. You can find his Twitter handle at real Chris Pulver. Find him there. And again, Chris, you got the show for a little bit. Thanks for hanging out today.
Of course. Thanks, Nick. Happy Friday.
See you, man.
Cool. Thanks. All righty. I was just taking a look here at I've got some China plays. Alibaba and Baidu. These are some big ones that I've planned around. China's been kind of lifting animal spirits. It's Year of the Dragon. You can say whatever you want, but technically this is a really good looking trade. We've had a pretty reasonable pullback, though. It is certainly volatile on the way up. I mean, we had a run from around $69 up to $90. That's a really good rip A pullback is nice. We're coming back to some demand levels. I'm actually sitting with some ownership on Baidu with a break even around $92. And I'm up about, $8 a share, but I do have a covered call going out to next Friday at 102. So why am I interested in watching this? Because if my 102 covered call is trading for a very small debit, I might just take the profit, redeploy for another covered call, and see what that looks like. So I'm actually going to log into my Schwab portfolio here and take a look at this. I'm going to carry this onto my session at 11 o'clock with Equities on Demand, which is my stocks and options trading room. Also, really quickly, if you do join me on my YouTube channel, I do appreciate that. It's youtube.com/Chris Pulver. And on my Discord channel, I will post a link to join my Discord. I'm going to make this a big disclaimer and public service announcement. And I know Nick and the team at A1 Trading deal with this all the time, but man, are there scammers galore in Discord? This is why I waited so long to put something together, to put all my content in one place, because it is brutal where I have people join my Discord. I was at a conference last week in Seattle. I actually met traders in person, and they joined my channel. They joined my Discord over the weekend, and then they texted me because I gave them my phone number at the conference. They texted me and said, "Hey, are you messaging me right now?" Within like the first hour of them joining. So what I made the announcement for today in my Discord is, if you want to find me and talk to me every single day, if you join my Discord, stick with my public free group chat, okay? If you come into my Discord and all of a sudden there's a message that pops up that you think it's me, it's not me. And I know, like I said, Nick and the team and everyone out there that's out, that has a session, that has a platform, we deal with a lot. If it's something to do with, hey, this is my WhatsApp channel, or here, give me your personal information. Here's your cell, join, open this account. It's all crap. It's all scammers. And I hate it so much. And it almost makes me want to shut this stuff down, right? But I know that if I keep a public forum together that is safe and secure, and that authentically everything has to come from me on this channel, this is where you find me, okay? So I'm just saying, if you join my Discord, the free group chat is where everybody can post. I'm there every single day, all right? But direct messaging, I don't initiate direct messages. I never post direct messages. I don't reach out to random people and say, "Oh, you joined. Hey, what's up?" I don't do that, because what's happening is I talked to one of my followers last week, I think, 2 months of talking to somebody. And it eventually was, here's my WhatsApp and let me get your contact information, open an account with this platform. Don't do that. Keep it here in the free group chat. This is the best place to find me. All right. So anyway, that's that. All right, let me open up my Schwab account. I want to see if I throw on a covered call, or I'm not going to roll it necessarily because I'm good getting out of the trade. I'm trying to merge my Schwab account. I'm trying to get my Schwab account cleaned up with all my option positions. Obviously I'm an active trader. I trade a lot of stocks and options. I trade a lot of futures. I do most of that trading through Tasty Trade. Okay. I'm trying to get my Schwab account, which I have a margin account. I have an IRA account. I'm trying to get that all merged over to Tasty Trade to make, give me a one-stop shop and just be treated better broker-wise. So also Schwab recently, they absorbed TD Ameritrade. So everything from Schwab is now Thinkorswim. Thinkorswim's web platform at schwab.com. Like, it's a little confusing. So I have a couple of accounts that are in Schwab, and getting into the platform is a little bit of a pain in the butt. The Thinkorswim web app is okay. The platform's, Thinkorswim's great. It's just a bit of a learning curve for most traders that start out with trading stocks and options and futures in Thinkorswim. It's an intimidating platform up front, where Tasty Trade is not. You take all the kind of fancy trimmings of a Thinkorswim and streamline it, make it a little bit more intuitive, easier to follow with awesome support. Tasty Trade is a great broker, number one, and a great platform to use as well. So anyway, if you have any questions on that, you can hit me up and let me know. But I want to join in and see, okay, if I go into this account, there we go. Okay, so I'm bringing over my portfolio, which has shrunk in the last couple of months because I'm trying to concentrate it enough. I'm trying to do an ACAPS transfer, which is I just do securities-based transfer where all my positions can go into a new broker. In order to do that, I need to make sure I don't have any expirations within like 2 to 3 weeks. So Baidu is right here with a 102 call, and the stock is trading at $100. Okay. So what I'm going to look for is on this May 31st expiration right now, if I go to close this position, is trading for $1.24. I don't want to close that and take the loss on this, because not the loss, but I would take a fractional gain. I collected over $10.58 on this call. Okay, so if I get it called away at 102, that's helping me make over $10 a share on Baidu. I'm just going to let this go all the way down to next week. If we get above 102, I'm going to take the profit, roll out. It'll be like $1,000 net profit on Baidu. That'll also free up a nice little cash position here to then start to reallocate. Then I have a couple of expirations to get through for June, and then I'll be able to make that successful transfer. So anyway, this is starting to get lower and lower and lower. Traders that have been with me in Equities on Demand, we obviously scrolled for the last couple of years. We had from A to Z, we had, probably 50 plus positions in here. And I'm just letting it slowly concentrate more so I can make this get onto my Tasty platform. Okay, so anyway, I want to see if I can close it out for a smaller debit. It doesn't look like I can. If I want to look at a roll really quickly, let me go roll out. And then I'll get into take some requests on charts if you have any charts you want me to take a look at. So I could do $1.02. I could roll it out by another week and grab another 70 to 80 cents. I mean, realistically, I think if I just do this week to week, this is probably totally fine. Go out another week, 102, get 75 to 80 cents on that trade. And then just go out week to week and see, maybe it helps me make another $200-300. The reason I would consider doing that is I have expirations right in here where once this June 28th or June 21st expire, I want to be done with this Baidu trade. Obviously not trying to lower my profit, but I'm trying to get this thing, lower cost basis, and then get it called away at a price I'm pretty happy with. So I've got about $1,000 net profit if it stays above 102. If I roll that out by a week and I turn it into $1,100, roll it out another week at another $100, and maybe my net profit's $1,200, $1,300, $1,400, which for all I'm doing is trading options. That's not a bad way to play it. Okay. All right. So anyway, I'll handle that offline. Keep an eye on that stock, but China as a whole, FXI is a nice way to get some China exposure. We've had a really good run to the upside from these lows at $21 all the way up towards, that's a 40% gain as well. So China has certainly woken up a little bit. We have some demand levels and pullback levels that I would expect to see filled. I do have some exposure on these China stocks. It's mostly through options, but I'm looking for some type of ownership here. FXI, by going to positions on FXI, let me take a look here. Let's go symbol. Any Lion King fans out there? I've got some naked puts on FXI, 27, 26, 25. I'm willing to take assignment out to June. If I take all three assignments, which means price has to dip below $25 and stay there by June 21st, I would take assignment on all three of those. Now, collectively, I believe on FXI, I have about 39 cents of, is that right? 1, 2, 3. So this is it. Okay, so 1, 2, 3 contracts. So I collected $1.72. If I'm not assigned, I just make $172 of credit. If I am assigned, I take shares and ownership around $26. Then I have 300 shares of FXI. That bigger picture, I mean, I think FXI can get back to this high right here. If I own it at 26 and I get back to this high, which is around 34, that's $8 a share on 300 shares. That'd be $2,400 in FXI. To me, that's an easy measure move. If I want to stay longer term in that, if this is a double bottom, and this is something I've got to look out for, if this is a double bottom and we get back to the center high and we break that center high, my true target is up here to $45. So if I take ownership at 26 and I hold this thing towards 45, happily hang on to this for $20 a share, right? So the difference, and let's just say I do it, right? Let's say I have 300 shares and I make $19 a share. That'd be my profit over, the next, 12 months, 24 months. That's a pretty good chunk, right? That'd be about a 2 to 3% position on a lot of the accounts that I manage. And it's just one trade. So we'll see, but that's a little bit easier just to take some assignment, sit on it, not take up a bunch of buying power for something that's, I think, good exposure to have. I think it's diversified. It's a non-US play. Not that the U.S. is going to roll over. Certainly the U.S. has been the spark that the global economy needed to make this broad recovery. Europe is up, Germany's up, Japan is up, China's up, U.S. is up. I mean, it's certainly been a nice recovery since Q4, Q1. And as a bull, historically, my career has been buying in the stock market, investing in companies, taking that fractional ownership or, controlling options now and understanding that good companies stay, Good companies get stronger. And what you see over time is usually higher and higher amounts of concentration. I just listened to a podcast yesterday where this speaker was talking about, owning infrastructure stocks, airports, toll roads, railroads, and talking about when the railroad boom began, there were 70, 80, 90 companies that were all railroad companies. Now there's 6. So we have the same type of thing happening. That's what do you think the Mag 7 is? What do you think the Fabulous 4 is? It's a concentration of the biggest and strongest tech that is dominating the market cap for the SPY, the Qs. In fact, yesterday, Nick brought this up in the show. I mean, I've been trading IWM as a Russell small cap, but the IWF is a growth fund. Okay, this is the Russell 1000 growth. Holdings for the IWF, you guessed it, Mag 7, Fabulous 4. It's like, what is small cap about that? It's just like trading the NASDAQ. So anyway, it's cheaper. I guess that's one benefit is this, the IWF is cheaper than the QQQ, right? QQQ is trading at $456. If I can save $100 a share, that's obviously a nice little discount. So anyway, concentration. All right. Mikhail's asking about my Discord. I'll post that before I go. Yep. So if you want to join my Discord, just stick around for another 10, 15 minutes. I'll post that before I leave. Right. And if you pop in there and join, awesome. But like I said, just keep it in the free group chat. Let's smoke out all those scammers and just, let's let them starve. They don't deserve they don't deserve any attention. It's just ridiculous how ruthless it is out there. But that's why I waited 10 years to start a Discord, because I knew that type of stuff happens. So anyway, all right, let's take some requests. What other charts would you like? I did a whole review this morning, the dollar index, oil, gold, silver, Bitcoin, Ethereum. Ethereum is on the cusp of possibly announcing some approved ETFs like we did in Bitcoin. I want to be mindful of a potential buy the rumor, sell the news. So meaning this, we're at 37.23 on Ethereum. There is a potential bull flag play. Okay. Which means if I get some exposure right now, that's having room to run. But I do have a chart alarm set in case we have a pullback first. I want to get long Ethereum for the next maybe 60 to 90 days using, I can use in Tasty, I can go to a couple things. It's more expensive to do the Ether contract. So if I did just Ether futures and I went in, so if I went out 63 days and I put this at a price that I'm comfortable owning, I would just trade it based on a delta position. So if I went out and bought, let me see if I can find a delta here. So my delta's not loading. Let me go to the micro futures, MET. Let me go out here. Now I can get a delta position. This is what I was looking for. So maybe I can take that same delta and transfer it into the E futures. So if I did like a 70 to 75 delta, I mean, ideally I'd like to level at 3,100 because that's the price of the chart alarm that I'm looking for. This is a 31.75. So if I looked at a 3,200 call, okay, on the micro futures, my risk is tiny. If I just buy a call, I'm risking $40. Okay, if I buy a call with Ether futures right here, and I buy the same 63-day expiration 3,200 call, my risk is $20,000. So micro, obviously a big difference. For any account size, I mean, look, I'd rather trade 50 to 100 contracts in a micro future than I would putting one contract in here and having to risk like, oh, if I'm wrong, that's a $20,000 hit. No, thank you. Most of my account trades are going to be, $1,000 to $3,000 is pretty much my wheelhouse for risk. No reason to get any more than that. So anyway, but that is the potential announcement is, if we see an SEC approved ETF for Ethereum, more than likely we're looking for Ethereum to gun up to these all-time highs. Now, I might be asking for another pullback or correction before we get that move higher. But if all we're doing is kind of moving ahead of this and we have a bull flag and this thing rips up here to the highs, I would clearly want to participate in that. So I'm probably going to look at a position here when I roll into my equities on demand class and probably take a little stab with the defined risk. I mean, if I just do a call option, maybe risk $100 to $200 and that turns into maybe $200, $300, $400 of profit. I'm okay with that for a little stab. And then leveling in, of course, if it comes back to like 3,100 and just trade this out for the next maybe 60 to 90 days. Okay. Major indexes. Yep. I'll show some FX pairs. We'll go major indexes. So SPY or SPX. So we're trading at 52.92. Like I said with Nick on the show, I want to see what this candle means, because if we have a high and we have a low, I could see us trading inside this candle into next week. Remember, it's Memorial Day on Monday, so there's no market open for the US. It's going to be a quiet day. I could see us having low volume, very little action until we get a breakout lower or breakout higher. So I do expect some inside candle trading going into next week. What does that translate into? Nothing, right? Maybe it's a good time to be a seller next week if you just want to, sell some highs and buy some lows, or basically do some selling on options and try to collect on both sides of that trade. But be mindful that if we go breakout above or below, obviously a breakout to the downside is going to feel a little bit worse because it's going to probably come in with a bigger momentum and higher volatility. If we break to the upside, it might just be the same thing. More drifting, right? More drifting. So I look at that NVIDIA candle, I'm saying NVIDIA candle. I look at that post NVIDIA earnings candle as a sign that we're probably going to go sideways until the market decides to give us something more tradable, right? I'm looking for a breakout. It's as simple as that. You can do the same thing on the QQQ based on that recent candle from yesterday. There's the QQQ. If we stay inside that candle, I just want to be a little alert, like watch this low, watch this high. If we can't break the highs and it stays sideways, it would take a little bit of soury news to roll over and go down. But it's going to take some justification of, look, earnings season is over, right? Next week, we only have like 100 companies reporting earnings, and not many of them are notable. I mean, obviously every company's earnings matter, right? To shout out to all the companies out there, 7,000 publicly traded companies. But most of the market isn't going to move like it does with an NVIDIA, with an Apple. We saw just in the last month, you talk about those two stocks, NVIDIA, Apple alone, have moved the market, just like 1.5% all by itself. So those are the big ones. Next week, it's light. After that, we get into, June. Fed's not really changing their tone in June. Maybe it's going to be a disappointment with the Fed and the rate decisions, and they're kicking the can down the road for when they cut. So we will see how it looks for the summer, right? Point is, that's what I see on the charts. This candle, to me, is a little bit of this is a yellow light, okay? Because if we trade inside of this, I'm not forcing direction here. I'm not shorting. I'm not going long. I would wait to see, do we have a volatility expansion? And if so, what direction? So this might be something that we look at to go out maybe 45 to 60 days. If we want to be long in that volatility, we're going to see how much it costs us. Because, volatility right now is low enough and cheap enough that it's almost better to be, if I go back to the SPY or the Qs, the IV rank at 8.5, you're better off being a buyer of options right now. It's cheap enough to buy options. And you're not getting the premium when you're selling options. So therefore, I am electing to do a little bit more of the long option side at this time. I just want to make sure I go out far enough and it's not priced. I'm not getting priced out of the trades, right? So we craft those positions up, make sure it's like, okay, the expected move is this. Can we see this give us maybe 15 to 25% take profit? And if so, we'll proceed with that trade, right? But any questions on that? That's where I see the charts right now. Yesterday's candle is a bit of a yellow light, right? If we can't break higher, can't break lower, we're going into a holiday weekend. Probably going to be quiet today, probably going to be quiet going into Tuesday, Wednesday. If the market struggles next week to give us any clear direction, we're just going to have to wait longer, right? Maybe the next big catalyst is post FOMC and post CPI data and all the crap we have lined up in June. This is what's been happening. Month after month, the bigger catalyst has been a big company reporting earnings, CPI data, or the Fed. That's been the catalyst for the markets. So don't be surprised if things quiet down, slow down, and we're just waiting for the Fed or waiting for more inflation data, waiting for the numbers. Because what's the Fed saying all the time? Data dependent, right? Ballout's asking average yearly return. Over the course, I'm trying to think. I've been managing accounts for about 13, 14 years now. And I have my single leveraged account management has been about 17.5%. And then I also have offered clients a 1.5 to 2x leverage. You do the math on that. So, 2x leverage is over 30% a year. 1.5x is, 24, 25% a year. Pretty solid, diversified between stocks, options, futures, Forex. And now I just manage, my drawdowns are way tighter because of how diversified I am. So, but it's pretty solid. But there's your ask. I saw you asking that earlier. I mean, it depends on leverage. Like I said, my no leverage accounts are doing about 17.5%. Still beating the markets. I mean, the average S&P is moving, 8 to 9%. With dividends, it's about 10 to 11%. So I think if I can, beat that, I'm generating some alpha, and 15 to 70%. I'm happy with that. 20+%. I'm really happy with that. And yeah, it's been good. Okay, gold and silver. Everyone comes into this channel wanting to do gold. Nick and I talked about it earlier. Gold, watch for this. Okay, a little bit of a breakdown. I like the support levels on gold to start to buy more. I like gold longer term. I like silver longer term. Any pullbacks I'm looking to add some exposure. Okay. Silver, same thing. I think silver may continue to outperform. I certainly hope that it does. And the reason why I think that's going to outperform is because there's still a measure move we haven't even gotten to yet. So if we have this level acting as resistance becoming support, we could see silver pick back up right there. If this gets a little bit wilder and it goes something like that, where it becomes a nasty pullback on silver, I still like buying it at 26 where this initial breakout happened. And then I'll just take it back up and try to trade it back to that $35 level. So I still like silver a lot. Silver is between silver and gold. Silver is my preferred technical trade right now. I like the exposure in both. In fact, my account has about 7% exposure in gold and silver combined. About 4.5 of that is silver. So I'm slightly, it's more like 60-40 favoring silver over gold right now. But that's just because technically I think there's more room. Okay. Somebody asked a question on dollar CAD. I saw dollar CAD pop up earlier. Feel free to post a couple more. I'll wrap up in about 5 or 10 minutes. Dollar CAD's heading down for the day. Just look for the dollar index. Dollar index, I keep going back to this chart. It's got to make a decision. I can't sit here and watch the dollar index and think like, oh yeah, this is an easy trade. It's really not, right? The dollar index to me is either going to hold this level and rip to the upside, right? And that would be what I think would be our risk off trade. If the dollar gets stronger, I do not expect the stock market to hang on to all-time highs for right now. Okay. But as we know, the power behind a movement to the upside in the stock market, the rising tide type speak. I mean, if we see the markets continue to grind higher, I don't see the dollar getting stronger at the same time. That would be a very broken correlation if that's the case. All right. Therefore, I'm not bearish on the dollar, but I will be bearish if we get below 103.90 and look to trade this back down to these holiday levels here. That would be enough to say that the stock market goes up, gold goes up, silver goes up, crypto goes up, dollar just takes the hit, right? The dollar could be the one sacrifice for the broader market to go higher. I think there'd be a lot happier investors to see the dollar get weaker, the broad market and pretty much everything you touch, commodities, crypto, gold, silver, stocks, equities, everything goes higher if the dollar gets softer. Now, why isn't the dollar moving? Because nobody knows what the Fed's going to do. So the dollar won't make a big decision right now because we're right on this cusp and brink of, do we have a hard landing? Are we going to be going into a slowdown? Are we going to go into recession? What about this inverted yield curve stuff? What about it? There's a lot of uncertainty swirling around the dollar. So I'll keep it simple. If we break below 103.90, I'm going to be bearish on the dollar to target 1 and target 2, right? If this level holds and we break, let's say I put 105 in here. I put 105.60, but I think 105. If we break back above 105, or I would say pretty obviously 105.60, if we're up here, I'm going to be bullish on the dollar, targeting this high to be target 1, targeting that broadening pattern top at target 2. So if the dollar goes anywhere, that's what I'm expecting. Okay. Right now, neither one of those levels is giving me confirmation. Therefore, I'm staying out. I'm mixed on the dollar. I'm long dollar Swiss. I'm long dollar CAD. I'm short pound dollar. I am long euro dollar that I think I just got stopped out in overnight from a noisy day yesterday. And I'm long New Zealand dollar. So I'm mixed. I'm essentially hedged on the US dollar right now. I'm trading robots both directions, right? Because I'll just let the robots flow with whatever dollar pairs we get. So anyway, yeah. Uranium, URA, this is mostly my exposure to uranium. We're trading at 32. Let me see. So 33.74. I think I have a diagonal spread on URA. Let me check my positions here. So URA, sounds like I'm about to insult you. URA. So I have some naked puts on this. I have a 20, a 19, and an 18, just some cash secured puts on URA for assignment. And then I have an uncovered call at 22. So right now that 22 is probably trading for close to $10. I got into that debit at 9.59, and let me see what that is trading for right now. So I could get out of this trade for about $1 profit net, and that's per contract. So I make $200. I'm interested longer term in either maybe taking profit, reestablishing, or maybe just waiting to see if I can put in some more cash secured puts and keep the stock of URA. So I do have some extrinsic value at this point. Notice, I mean, I shouldn't be too worried about the time because I'm out to January of 2026. So I'm out 2 years on my uranium play. If we have a big energy migration into nuclear, and that becomes the safer, the cleaner, the alternative energy, I'm looking at this chart to get us into a symmetry move up towards 41, almost $42. So if I have a call that I paid $9 for, and it's a $20 position, or what, 22 or 20? Let me check. My call is at $22. So if we go up to $42, that's a $20 intrinsic move, which means the value of my option would at least be worth $20. That gives me about an $11 profit. Okay, so it makes a couple $1,000s on the trade. If I take any assignment, this might be another thing I look at. I do expect URA to be volatile, but if I could do a cash secured put at $30 or $29, I might look at that. You actually just gave me an idea to look at that from equities on demand. I don't mind taking some ownership. I just want to make sure that I can lower the cost basis. So if I get assigned, okay, if I get assigned on URA, I want to make sure that, every 30 to 45 days, I'm lowering my costs, and try not to cap my upside. Because if I don't cap the upside, when price eventually goes, I can lower my cost basis by maybe 15 to 25%, have that added to my bottom line when it comes to a profit. Okay. All right. That's my question. So Lee's asking about uranium. That's my trade there. The UK 100. Let's take a look. A lot of, like I said, the broader market's been up. Euro's been up. The FTSE's been up. The DAX has been up. UK 100's up to all-time highs. I mean, I still think it's a buy, right? That level of past resistance, if we have a correction at all, look for a trend line, look for higher highs. If we start to see the Bank of England cutting rates, that's probably going to help the broader market. We see the ECB cutting rates, it's probably going to help the broader market. Weakening currency pairs typically help the equities world. So that could be a good thing moving forward. Inflation seems to be a little bit more under control. They're willing to cut rates maybe as early as June and July. So I think, looking for pullbacks and looking for dips, looking to stay long right now. Market wants to grind higher. Okay. WTI, you're talking oil here. So oil, I've got some analysis on U.S. oil. You can kind of take that same way. So U.S. oil on the daily, we're in a sideways range right now. We're refusing to break out much lower, but yet we're not breaking the trend line. To me, this is similar to the dollar index. I need to see oil. If I'm going to be an oil bull, we got to be plus 80. We got to be above $80 for me to buy this thing again. If we start to break back down and we remain on the left-hand side of this trend line, then, stop losses stay on the left hand or the right side of the trend line. You look to see if oil wants to slide lower. This is all about supply and demand. So I don't know what's happening outside of the conflicts we have in the Middle East. I know that there's probably a lot of excess production going on to keep oil prices lower. The question is, how much of a slowdown in demand is there? If there's a slowdown in demand, oil tends to drop with it. But if we hold here, we get above 80, I think we're on a clean, revisit to these highs. And this is a tough spot, because to me, the easy trade on oil, and you can look at WTI as well, easy trade on oil is buy it low and sell it high and stay out of the noise. That's where we're at. If I stay out of the noise, there's no trade, right? But I'm just watching because I'd like to buy it low. I'd like to sell it high, but in the middle, I'm probably just going to stay out of it for right now. Okay. Aussie New Zealand. I'm currently short on Aussie New Zealand, and it's working out pretty nicely. We shorted this thing around 109. We're up about 70 pips right now, and I'm looking to see if the Kiwi will head down a little bit lower. So, Aussie versus New Zealand means a stronger Kiwi. So if we go this way, pull back, this way, this currency pair is notorious for 618 and 786 pullbacks. So if we line up with this structure here, that would put me into this window of around 107.50 to 107. That's kind of where I'm targeting my trade right now. And from that point, I'm looking to actually go long against the Aussie New Zealand. But if the RBA cuts before the RBNZ, or neither one of them cut, it might favor the Kiwi right now with a slight positive swap. But I am looking for some more New Zealand dollar strength. I'm long New Zealand dollar. I'm short Euro New Zealand, and I'm short Aussie New Zealand. So I'm actually doing a little bit of New Zealand dollar strength exposure. Okay. How long you been trading? I've been trading since 2000. It's been a long time. Very active trading. You know, when I really cut my teeth in the markets was one of my clients at the time. I was a golf instructor for many years. One of my golf clients was a full-on currency trader. So he managed a fund. I learned how to trade from him as far as active charts, you know, day trading, scalping, stuff like that. And then from there, I broadened my horizons into futures, broadened my horizons into trading options, being more active with my stock portfolio. So I would say my most active trading started in 2007 and haven't looked back. So it was like passive investing 2000 to 2007, active trading, learning from some professionals, 2007, 2008. And then here I am, you know, 15, 16 years later. So been a while. CAD Swiss. CAD Swiss, I'm bullish. I'm bullish. Aussie Swiss, CAD Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss, Dollar Swiss, bullish. Ask me again in 6 months, bullish. Ask me again in 2 weeks, bullish. I'm sticking with that narrative. Okay, there's a lot more upside in these trades, and I'm sticking with them. Plus, it's positive swap. My Forex account right now is up around 30% for the year on these currencies. That is mostly because of Swiss pairs. I put about a 5% exposure in. I've been leveling in, adding to my positions. The account's grown quite a bit. So I'm not looking to close that account anytime soon. I'm not looking to take profit anytime soon until my profit levels are hit. And there's still plenty of upside. So I would like to see that Forex account, if I can turn that account into like 50, 60% gains, my goal is to try to get 100% gains. That's what I'm going for. So thanks, Swiss. Yeah, CAD Swiss target. I'm trying to trade this all the way up here towards 71.50. That's my target. And just real quick, and then I'll let you go. This could also be lining up for a larger head and shoulders pattern. This could be a left shoulder. This could all be working up to a neckline. We could still have a correction and pullback, but that's going to be my symmetry move. That's my profit target. So if we get 7150 to 7300, that's my window to say, okay, I've built this position up over time, and I'm taking a massive chunk of profit right in there. I'll be very happy with that trade. Okay. All right. Happy Friday. I'm going to let you go. I'm going to jump into my trading room right now. Equities on demand. Have a great weekend. Thanks for being here with A1 Trading. Nick, thanks for having me. Have a great weekend, everybody. Before I go, if you do want to join my Discord, let me find a free group chat link. So let's go copy this and post this. So this is my Discord link. There you go. And just remember, focus on the free group chat. Okay, so I just posted that link right there. So you can copy and paste that, jump in. If everyone's doing it right now, we can watch it happen live, and then I'll let you go, jump into my trading room. So here's free group chat. Post the EDGEFINDER giveaway. Congratulations. Sounds like Silas was our winner. And this is the free group chat. So if anybody's popping in here, awesome. Thanks for posting that again. And that's it. I'm live on Mondays and Fridays for my own session, the Poll Report. I jump on with Nick and the team whenever they need me, typically at 10 a.m. And always happy to be here and help. Okay, thanks a lot, everybody. Happy trading, lots of profit. See you soon. Thanks, bye.
Thanks again for watching today's show. Our goal at A1 Trading is to share free value to you, our audience, through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more, lest ye walk the plank. Join our crew as we head out to steal more, go long on gold. See you next time.